Okay, so this is a watch list update for week of 1 or January 30th, 2017. This is Monday, following an S&P 500 debacle. I'm not going to get into too much detail outside of the fact that this is in result to President Trump's crappy, Muslim ban. I mean, this is just some next level Down syndrome right here. I don't know how else to describe this man. I mean, he's just a retard. So anyway, outside of last week's list that I would recommend keeping an eye on, I would recommend keeping an eye on PFE. I won't go into much details because you can just go back and review some other videos. PFE, wait for a longer term consolidation period for a turnover. The only thing that is worrying me about this is the fact that this could be a consolidation period that brings the trend to back to a lower section if you do like a little narrow wedge channel area. Although it is higher highs and higher lows, this bearish turnover, this is just in result of the S&P 500, because this stock does tend to follow that ish for the most part. This one, just keep an eye on for a stochastic turnover, which is just a fancy way of saying it's going to turn around. I'll make tutorial videos eventually when I freaking have time for that. FH, I would keep an eye on this one just because it could reach back to this this acute channel right here unless it retraces back to this longer trend and continues to go back up. So there's a lot of profit to be made here because it did turn around at the 23.6 retracement, which isn't a set stone a resistance. It's getting pretty significant because it did touch 3 times right here, but the trend overall for in terms of a narrow scope, it is starting to go back up. Let's see. So anyway, outside of that shit, AF I am really digging for now. You do have this trend right here with a consolidation period. Obviously, you can probably tell right here. But I would love for it to come back down to this region so that we could get a little more profit, because I'm not going to buy into it if it continues to go up, unless it turns into a momentum trade. But this is just one to look at. There is more technical stuff I could talk about on this charting, due to the recent hike, just because the price action has been moving up so aggressively. But I'm going to skip out on that for a tutorial video at a later date. Now I am going to go through this watch list while showing y'all how I draw channels, because I have been getting questions about that. And so I guess we'll just work through it together. So obviously this is going to be a little bit more of a long-term trend line. You got 3 touches, which makes it fairly statistically significant. So if it does end up retracing, I would foresee it turning around over here, especially if there's a consolidation period over here. I wouldn't be surprised if it went back up. But you do have a triple bottom right here, you could call it, that is uptrending with a increasing, just an opening wedge pattern, you could say. So it did turn around here, and I'm not surprised because it is following the overall trend. This is just basic market psychology. So we have a consolidation period right here, and I am waiting for a pull buy signal right here, where this next candle, I don't foresee the candle going crazy today. We'll just have to see, how much sense our government can start doing bring back some buyers. But as far as CENX is concerned, just wait for a very bullish candle that breaks the, let's say, the 1595. I would say breaks the psychological 16, and typically when this happens, you'll get some very high volume, very fast upward trending motion. So that if I narrow this down a little bit, it would go, you'd have a candle that's very aggressively up for a multiple amount of days, especially if it follows the trend of a high and tight signal, which is one of the more aggressive, most profitable types of signals. Really digging those, but typically the rule behind that is an increase of about 90% over the course of 2 months, which doesn't fall into this parameter, but that doesn't mean that it can't, just because you could easily fall into that parameter if you do start trading it. So kind of play this one on just a technical basis, how it moves and whatnot. But I'm kind of hoping this turns into a high and tight kind of flag signal, because that could turn very very nice. So you do have a low right here of almost $9. So if it does break above here, I would foresee that double resistance at $18. So it could go all the way up to here for a plus 18%, and you'd see, you'd see that consolidation period. So you would see that consolidation period for a number of days, so you could end up with some of this right here. Depending on how tight or loose the pennant is, will depend on how successful this is. I would consider this to be fairly tight, so this would be a more successful type of pennant. So this could go up even more. So if you monitor this one, you could. The average, I believe, if I remember correctly, is roughly 53% on Thomas Bulkowski's book. He's looked at thousands of charts to get some statistical value on different types of patterns. But the average is 53% with a failure rate and a failure is breaking even. So the failure rate being 1%. So your risk is very minimal, so this is very appealing for a lot of investors. So if this does break out, a lot of people are going to be jumping in on it, and if a lot of people are jumping in on it, the price action is going to move insane. So there's your potential analysis there for that one, I suppose. So FCX is going to be our next one. Resistance is turning to support. On this, last I checked, I did write some notes down. I haven't gotten a chance to look at these for some reason. But, okay, so we got this trend going on here. Oh, cool. So it is touching and whatnot. Oh, God, if I can zoom in a little bit. Oh, come on. Oh, come on. It's because I don't have the logarithmic thing. I moved this a little bit. But, okay, so we have the trend going on. I'd say roughly right here it seems to be following this trend. You could kind of argue that this is a pipe bottom, but pipe bottoms are way more successful on weekly analysis. So if you were to look at a weekly analysis and you found something looking like this, then this would continue to go up for weeks. But this is, I don't like staying in a week. I like to get out as soon as it moves back, because I tend to follow a little more volatile market. So this one, obviously, it's following this trend, waiting for a confirmation to either continue going up or going back down to this other trend line. But, NAK is going to be the next one we're looking at. NAK is another one of those high and tight signals, although the pennant is very, very loose and just completely inconsistent. This one I'm just waiting on a very good signal. the reason why I'm looking for this is because it had some pretty good relative volume on Wednesday with a good doji candle on Thursday. So this is showing some support. Maybe a short squeeze option for this one. You know, because this one, like I said, has been trading under $1 if you've been watching my videos. So something that moves up this fast does tend to come back down. So if you do short, then this may be one to look at for shorting. This might be a good time to point out what a high and tight signal is, just because the way the nature of this one. Okay. I never trade under $1 just because I hate that volatility, but this one is kind of proving my example here. So the definition for this is, according to what I've been reading, is an increase in 90% in under 2 months, and this is a pull consolidation period right here, and you've obviously X marks the spot. I've talked about this before, and because it passed through that barrier, you've got more momentum trade. So you've got a potential of what looks like 20.47%. Really good profit taking right here. More consolidation period, tight pennant right here. Now, if a pennant or a consolidation period lasts more than 12 days, don't trade, because they tend to perform less, and if you end up chasing a high and tight flag, it could really end up biting you in the ass, because it moves up so fast that it does run the potential of going back down. So just play those conservatively. Now you have a crossover at this location. It could have happened intraday over here, you never know. But because this ended up opening high, small wick right here, so there was an attempt to go back down, but it proved to be a little support area right here if you do look at a lateral line. So it did end up going back up to a profit of 18.86. Whoops. And some more consolidation period right here. Now see how this is getting even wider and wider and wider in terms of the pennant. So you've got this area right here where it's consolidating even more loosely. So the looser it gets, the worse it can get. If you were to extend this like any other type of trend line, supports turns to resistance, and resistance turns to support. I've been saying this for a long time. So same thing happened here. Followed that trend, retraced to that trend, and started going back up following the 20 EMA roughly. So I'm just looking at this because, one, it's educational for me, and two, there's a lot of potential here, especially if you're looking into shorting. This is, there is a potential for it to go back down, but FOMO, like I've been saying, fear of missing out, this is still, on a lot of people's radar. So NAK, just be careful with NAK, because people have played it already 3 or 4 times. So, I wouldn't be surprised if it does a reversal, especially with the shitty news that's coming out. Not a lot of pride going on here. Okay, so PEN. Kind of a double bottom, tends to, this one, the only reason why this one's on my radar is because it's so close to that 200 EMA. If you can get a double crossover on the EMA and following the overall channel, then we might be in good shape. If you look here, you've got kind of a triple bottom. It did end up breaking through this support, found resistance down here. Probably if I were to zoom back, there would probably be something else. This may have been news, I didn't look into it. But you do have another reversal right here. Probably simply because of this consolidation area, followed by this consolidation area, followed by this consolidation. If I were to draw a straight line across, you could probably see a little better. See how they're touching, touch, touch, and then a little bit more touching right here. See that? So this is just basic, not fundamental, but technical analysis. They tend to reverse over here. So X marks the spot again. You've got some buy volume going. So this one I am simply waiting to see if it will continue back on the downtrend, because you do have another consolidation area right here. I'm just going to delete these, keep it clean. But as far as stochastics is concerned, I'll look at stochastics later on today, but you know, this isn't a clear buy signal, just because it has, as far as stochastics is concerned, it is fairly high, being at 64 and whatnot. What do I have my RSI at on this? Yeah, this is pretty high RSI. Now, if you did look at the MACD, you can argue that you have a buy signal on. You know, you could argue that you have a buy signal here, but I wouldn't play it just because of the overall trend. I would keep it on my radar just because it's so close to a 200 EMA, so if it does end up crossing this, it could turn into a momentum trade for a long-term investment, because, you know, a lot of investors use 50 and 200 EMAs to base their purchases. So something to look into. TTMI. Let's figure this one out together. Yeah, gross. Okay, so this one, following a channel that is 1, 2, 3. If I were to extend it back for some more statistical significance, yeah, you could almost say that this came real close, but I wouldn't consider it. You know, even though it did reverse over here, it could be because of other factors. But one of the reasons why this is on my radar is because just because it trades fairly predictably, and it's pretty low on the RSI, and if you look at the stochastic, it is turning over, so I'm just kind of waiting for that buy signal to show up. Kind of analyze the following candles. If you do have a bullish candle, like I've been saying, I don't foresee this being bullish anytime soon with the news that's coming out. So if it does end up retracing back here, just wait for that confirmation that this is still a support. I would still consider this to be a significant form of support, because it's been following it for a fairly long time. But considering that this stock in roughly around in May, actually in May, it did end up, see what I'm talking about, like the last stock, it did end up crossing over the 200 EMA right here. So this ended up going back to a longer term investment for if you did end up buying back here. You'd be up 107% in roughly 7 months, 7 or 8 months, like 7.5 months. So, I mean, these aren't bad plays to go off of, but because this tends to, most stocks tend to follow seasonally, if you will. I wouldn't be surprised if it did turn over. You know, people are locking in their 107% profits and stuff. So, something to look into. You do seem to have a double top, maybe even a triple. Obviously it's not touching, but the fact that it did turn over is concerning. So this could easily turn around, but still one to keep in mind. WTI. This is an oil stock, so keep that shit in mind. If you know anything about oil, is that it's heavily dependent on global markets, and you know, like what is it called? God, OPEC, Jesus. So anyways, with OPEC and everything, if you do follow OPEC, if you follow oil very closely, this is a fairly good stock for you to follow. Waiting for it to hit around this resistance area, because if it does meet the 276, you know, it could turn back to a bullish sentiment, but you never know. So you could be getting 22% profit on a perfect trade for 13 days roughly. So, you know, just keep this one in mind. Even though it did recently cross the 200 EMA, this does not mean to buy into it. especially with the hot winter that we've had this year. I don't know if you believe in global warming, but there's an obvious trend in in the temperatures. With every year being the hottest year on record and blah blah blah. You can go on for days and talk about this shit, but So another example right here. This is another solid example. If you would humor it for a high and tight signal. So you got a 1, 2, roughly, you could say around here to here. You've got from 1.32 going all the way up to 3.0, so well above the 100% mark. So, like I've been saying, you've got a climb right here. You got this consolidation period where X marks the spots roughly. This is very rough trend lines here. They're not accurate, but so this is kind of your buy signal right here if you do follow the pennant consolidation over here for the high and tight flag. Usually a high and tight flag will have a very aggressive pull signal, so this isn't following the typical high and tight flag signals here, but just the fact that it did continue to go up. You could also argue that this is another consolidation period, and it did end up breaking through the $2.36 resistance over the course of that this week, the 3 days here. So once it did break through, it did end up punching through that little barrier here. Enough of this one. This one's just, I tend to follow oil just because it plays a hand in everything, whether it's industry, energy, just oil, coal. Just follow energy so you get a better idea of what the overall market is going to do. Obviously, this is, just common sense. If you've got stocks in the automotive industry and you're not following oil, then something's wrong with you. Okay, this one I'm only looking at because of this aggressive drop followed by a gap down. I'm not surprised this fucking happened, Only following this to get a trade or a consolidation. This one I'm going to follow over the course of like a week or 2 weeks or something, because it's probable that it's just going to keep trading like this, it could just keep freaking bouncing around like this for a long time until it breaks through that barrier, and then the next day it just continues to go up, and then it's going to test for that resistance here. Good God. And then come back up and meet this gap down area or meet this resistance. So gaps are very much optionable trades that you can play just because of the statistics on gaps. They do tend to fill, but it is not a guarantee. Like I say, follow the trend, wait for candle development. Just because it does something like it's up, and then the next candle just goes boom and then fills it, like fuck it, there's no way you could have caught that. Just don't buy into it just because it filled it. Like, it could easily just turn around, and that's just that kind of volatility. Over here, obviously, there is some news that occurred and just made it drop down to $5.78. I don't really care about the news right now. I'm just trading it technically on a technical basis. So, once I start getting serious about making a purchase, then I do a very close look at the fundamentals of the company. What is their product? Who are they targeting? What is their future projections? If you want to get an idea of how detailed I get into the stock, then just look at my AMD analysis. That one is a little bit of an outlier just because I do love technology. So next one is GILD. GILD, same principle. If you're looking for something on the long term, I do realize it is expensive. But don't let the price deter you. What you need to be playing is percentages. So if you only have like $500, this is just a few shares, But if you do end up playing your cards right and it's perfect, for example, if you do meet this resistance and like let's say you bought today, your profit margins are about 8% on a perfect trade. So bear that in mind. That's perfect trades. I never do perfect trades because I wait for confirmation candles. I would rather make a profit going up than to chance it for the bragging right of saying that I made a perfect trade. So that about sums up the watch list. So recap: PFE, keep on watch; FH, keep on watch; AMD, just because I follow that one so much. If you're curious about AMD, I'm not going to go over it on this video. Just look at previous videos. AF, CENX, FCX, GSAT, HK, NAK, PENN, TTMI, WTI, RAD, and GILD. So those are the ones that I'm going to be looking at over the course of the week and see how they develop. So that about sums that up. I know I promised y'all some tutorial videos. Those are coming as soon as I freaking get a chance, but I do have some studying to do to make sure that I don't fuck up on some stuff. So yeah, that about sums that up. That's the watch list. Alright, so good luck, and if you have questions, just add it to the comment or text me. You know who you are.